Hi everyone, I'm Yogesh, your host for the Smart Alpha Show. Now here's something interesting. Gold has corrected nearly 15% over the last 1 month, even with a war breaking out. In this video, we'll break down why this correction would actually be one of the best opportunities to enter gold. The core reason behind gold falling, despite geopolitical tensions, is crude oil. Crude prices are up nearly 50%. Any country importing energy first needs to buy US dollars to pay for it. So, what happens? They sell assets like gold and move into dollars. That's exactly what's happening right now. But this is a temporary phenomenon. Once the war situation stabilizes, multiple long term structural triggers are still in play, triggers that can push gold significantly higher from here. Stay till the end to know what prices can gold reach to. Since 2022, gold has seen a massive surge in central bank buying. If you look at the long term trend, it forms a clear smile curve. From 1990 onwards, central banks consistently reduced gold as a percentage of their reserves and increased their holdings in US dollars. This shift started after the US abandoned the gold standard under President Nixon. But everything changed in 2022 when the US froze nearly $300 billion of Russia's reserves during the Russia Ukraine war. It sent a strong message globally: your reserves are not truly yours. Since then, countries like China, Russia, and several others have aggressively increased gold purchases and reduced their reliance on US dollar. You can clearly see this shift. The dollar's share in global reserves has fallen from 66% to 58%. That's a massive structural change and a serious concern for the US, which continues to rely heavily on borrowing. Now, look at the scale of buying. Between 2011 and 2019, central banks purchased roughly 450 tons of gold annually. Since 2022, that number has jumped to nearly 1,000 tons per year. This change is massive, and this trend is only accelerating. Earlier, China and Russia were the only dominant buyers, but in 2025, the top buyers were Poland, Kazakhstan, and Brazil. This clearly shows that the shift towards gold is now global, not just China and Russia. At the same time, supply simply cannot keep up. Gold production grows at just 1 to 2% annually, but the demand is rising at a much faster pace. This structural supply demand mismatch is what creates a powerful sustained uptrend in gold. Now, let's talk about the biggest driver, the US dollar itself. US federal debt has crossed $39 trillion, dollars, more than 100% of its GDP, first time ever in the history. Earlier, countries like China, Russia, and India were major buyers of these bonds. That demand is now weakening, which creates a dilemma. To attract buyers, the US should raise interest rates, but higher rates risk pushing economy into a recession, something policymakers want to avoid. So the most likely path, continued currency debasement. Going forward, the imbalance between gold demand and supply is only going to widen. Central bank demand alone could exceed the 1,000-ton annual average we have seen since 2022, and history gives us a clear picture. Between 2000 and 2012, gold went from $200 to $2,000 per ounce, a 10x move in just over a decade. This is gold you consider as a hedge. Yes, a 10x return. JP Morgan, Bank of America, everyone is saying that gold might reach $6,000 by this year end, which is almost a 30% upside from here. I see this as a very strong opportunity to increase exposure to this asset class. Clearly, gold is no longer something you keep 2 to 3% allocation to. It's becoming a core allocation. We at Magnus Hathaway Investments do this kind of deep dive research across asset classes day in and day out. If you found this valuable, subscribe to the channel and share it with someone who could benefit from this.